Good morning, everyone. It's Jared here from the Alpha Capital Group, doing a brief on the recap of the trading week that has just taken place. So largely speaking, I suppose there's been a couple of dynamics this week. I suppose largely speaking, the indices have continued to go in a fairly consolidated range through the course of the week. We only have to look at the Dow Jones Industrial Average, also referred to as Wall Street as well, and some of the exchanges to see where the price action or what the price action has done since the beginning of the week. Very much kind of up and down in a more consolidated range. Price action is kind of bouncing off these lows at 34,300, with the indices obviously are here on this one holding at around about 34,850. So we're very kind of meandering, kind of up and down. A lot of choppy volatility this week. Russia-Ukraine narratives continue to dominate the markets. We had a raft of central bank speakers on Wednesday, with even more of them now signaling the potential for a 0.5 rate hike by the FOMC in May. So again, I think after a week like we saw last week, where the price action just continued to every day continue moving higher, we can now see visibly a consolidation taking hold on some of these indices. Now, obviously, the Dow Jones, we can witness that firsthand. However, if we look at the NASDAQ, we can see that the NASDAQ is still gradually kind of grinding higher, though. You can see that despite the Dow Jones and the S&P kind of being a little bit more condensed and consolidated, the NASDAQ is continuing to outperform the others, as we're seeing these higher highs, higher lows scenarios, particularly on the higher time frames. So yeah, there is a little bit of a risk on sentiment in the markets continuing this week from where we were at the beginning of the week. Now, this is where we finished last week, up here at around about 14,650. So we're only marginally higher in the NASDAQ. So not a massive increase in the course of the week. We did obviously get those pullbacks to the 14,400, 1450 level, which we alluded to earlier in the week. And we have seen the price action kind of steadily grind higher, most particularly kind of yesterday and Wednesday evening. So again, the market's holding a little bit of a bid in the indices. Again, we can see that on the S&Ps as well. If we load the S&P chart, bring up the higher time frame parameters, we can see now, broadly speaking, we are nearly where we started the week, and back into those 4,500, 4,520 highs. Now, again, we can see that very, very clearly. We can see that the S&Ps obviously had a little bit of brief spell to the downside earlier in the week. We have since clawed it back. And by and large, we're closing out the week fairly flat from where we actually began the week. So not a massive move in the indices this week. We did mention the fact that we had a number of FOMC members and other central bank speakers across the globe. We'd Lowe in Australia, we'd Bailey commenting in the UK, in the bank within the Bank of England, and we had Lagarde in the ECB as well. So we have had a raft of commentary across the board as well. Now, I suppose if we look across some of the other asset classes, we can see that gold has continued to pop higher and has come back into this 1960 range, or this level that we alluded to on the previous calls. So we did have kind of short-term highs around 1950. That was very, very quickly taken out yesterday, and we have pushed back into this 1960, but as yet price action is holding underneath. If we look at oil, from where we were at the beginning of the week, we did mention the higher high, higher low scenario. The price action had bumped into this 116 level, and you can actually see we've held 116 to a T, and the price action has migrated itself back into this sub 110, 112 level here. And we're back into a consolidationary state. So again, broadly speaking, the markets, it's the first time we've probably seen the markets actually end the week nearly flat, considering that where we have been over the last maybe 4 or 5 weeks with oil prices, with gold prices, with indices kind of showing a lot of volatility as well. And two final contracts, which we obviously want to go through as well. One, the DXY, which we're going to look at now, which again, we see that the markets have been fairly consolidated for the week, particularly here on the 1 hour, we can see that as well. But again, from where we were over the last 2 weeks or so, price action 97.75 and 99.50, or just slightly underneath 99.50. And more presently this week, we're seeing the price action back and forth in an even much more condensed range. So again, if you moved across to the cable or you moved across to the euro dollar, largely speaking, we haven't seen that terribly much happen in the FX markets. Very much consolidated, very much kind of up and down. And I think the markets overall this week are taking a little bit of of a breath after what has been some very, very substantial volatility, not just in March, not just in February, but since the beginning of the year, we saw that massive increase in volatility right through from the beginning of January. So it's not surprising that the markets are taking a little bit of a pause and a little bit of a break. The other, I suppose, the final, contract or asset that we're going to look at is the 10-year yield. Okay, so if we look at the 10-year yield now, we can see that the 10-year yield has been probably the big winner this week as we've continued to grind higher. Now, this is where we were kind of last Wednesday on Powell's speech off the Fed. And since then, we've gone from kind of 210, 215, just under 220, all the way up to 2.4% on the 10-year. So that is a massive increment. And even again, broadly speaking, if we go full screen for a moment, we can see how we've gone from 1.7% all the way up into this 2.4% level up here. So even since the beginning of March, we've gone up 0.7%, which is a massive increase in the 10-year. So volatility in some asset classes becoming a little bit more pronounced as we take a break in others, preferably the indices and our traditional oil and gold. But again, I suppose for the week we've had a lot of data, both mixed, both up and down. Even for example, this morning when we look at the IFO, it's come out worse than expected. So that's obviously led to a slightly weaker moves in the European trading session. Again, worth paying attention to. I suppose rounding off the week, just when we look at the calendar for today, Michigan consumer sentiment is something we'll be paying close attention to, as to will be the Fed's Waller speech this afternoon. Other than that, there's not really too much else to say other than the fact that the clocks for session opens will be going back to normal on Sunday night. So the Sunday night open won't open till 10 o'clock, and US trading session opens and data points will revert back to 1:30 and 2:30 p.m. respectively. So 2:30 will be the open session time next week for the US trading session. So keep an eye on that, particularly if you're looking to trade pre-market, any of the pre-market movements in the futures. All right. Other than that, everyone have a great weekend, and we will see you all on Monday.